What's up? Mike here, head trader at True Trading Group. February 5th, a lesson for us on volume, and I opened up a new swing trade that I'm going to tell you about. First things first, let's get to the lesson on volume on MLNT. It has to do with also being able to tell when a stock is getting tired or when a stock is running out of momentum and is getting weak. So MLNT was on my watch list today. As I zoom this in, you see had a big day yesterday for the stock. You go out to the daily chart, you can see here was yesterday's action, big volume day for the stock. So it was on my watch list today. We were gapping up above yesterday's close. Pre-market, I talked about my game plan, wanting to see if yesterday's highs held support because we were gapping above that area. Right off the bell, we pulled straight down into that support area and put in that big tail. Okay, so right there, I saw that big tail. I saw big time, huge volume off the open, heavier volume than we saw at any point yesterday during the stock's move, and had a big day yesterday. That is typically a sign of momentum. Okay, so right there, that's when I jumped in here long. I'll zoom in. Tier 1 at $1.58, stop loss 140. I'm going to add tier 2 through the 165 area. I ended up adding at 164 and 165. You guys see we get a pullback down here to test that area one more time to put in a double bottom gap up pattern. The thing I want you to notice is the trade line came in and held support. So you got a double bottom gap up. We held support above the previous day's high, and we've got the trade line that came in to hold the stock up. You then see that trade line continue to hold support and push the stock up through the high of the day. I went ahead and took my first piece of profit off right there to $1.71. Back to my trade announcements, took some profit, $1.71, still holding some. And now my second take profit is really where the lesson comes into play. Because at this time, when we made that move, I said to all of our members in chat that I did not like the volume on that move because there really wasn't any. And you can see we never got an increase in volume on the break through the high of the day. And that concerned me. And then I said, gang, listen, you got to be careful. The volume really hasn't kicked in here. You always want to see an increase in volume when the stock breaks through the high of the day. An established high of the day, when it breaks through an established high, you want to see volume increase. That's your early sign that there's momentum and the stock's going to continue to push. So when we didn't get that increase in volume here, I started to get pessimistic on how much momentum this stock was going to have and if we were really going to make a nice extension move. So I went right ahead and I dumped the bulk of my position right there at $1.72. Back to my trading announcements, you can see here it took more off, 172, still holding some. And it's all because of the volume. I was waiting for the trade line VWAP crossover, which we got. Okay, right there you can see the trade line crossed up and over VWAP. Okay, but we never got the volume. The volume never came in and the stock rolled over, broke back below VWAP. I sold my last piece right there at 164. You guys can see sold out remaining 164. I was holding on to like 20% of my position just in case volume came and the trade line held support and it squeezed it higher. But being able to recognize that weakness and recognize that slowdown in momentum and recognize that lack of volume allowed me to exit this position, 10, 15 minutes prior to the stock failing. And I'm able to walk away from the trade with a nice profit, long at 158, added 164, 165, took some off 171, took the bulk off at 172, got flat at 164. So not a home run trade, not a huge win, but still a profitable trade when the trade actually ended up failing and the breakout failed. The stock rolled itself over, okay? But I'm still walking away from the trade profitable, and it's because of these little signs and signals that if you can start to recognize these things early on, you can act before the stock fails. You can sell out before the breakout fails and the stock pulls back in and you're selling for a loss. You can actually walk away profitable like I did on this MLNT, and that's why this lesson is such an important one, because it's literally the difference between making money and losing money. All right. And lastly, before we go, I opened the swing trade today, guys, on ROKU. Okay. ROKU had a monster day yesterday. Okay. Huge, explosive, high volume breakout day yesterday. We pulled in before the close, and then we gapped up here this morning. We pulled in off the gap up. We held this previous area, and when we started to push up here is when I got long. Okay, I got long right there. Okay, I'm long right there on Roku, and it's because of the daily chart. Let's get to the daily. Oh, well, first let me take my trade now, so you guys can see swing trade long Roku 48.51, stop loss 46.50. I'm risking about $2. All right, let's zoom in on the daily chart, and what I want you guys to notice here is a reverse head and shoulders pattern. Here's your left shoulder, here's your head, and here's your right shoulder. You can see here, and then right across this area, right around 46.50 is your neckline. Okay, we broke through the neckline yesterday on a high increase in volume. We also broke above the 200-day moving average. This purple line on my screen is a 200-day moving average. So the neckline on this reverse head and shoulders pattern lines up with the 200-day moving average. Yesterday, we broke through that with real heavy volume. Today, we held above that area. I'm looking for Roku to consolidate, okay, to consolidate in this area. Okay, you can see we pulled in today and we tested that 200-day moving average and it held. I would love to see Roku do this tomorrow. Okay, maybe get up there and test 50. Okay, if we get back down below, okay, that 200-day moving average and these previous highs of right here, there's 46.25. Go to 15-minute chart, becomes a little more clear. Okay, so here's my stop loss. I said 46.50 area. It's going to be 46.50, 46.25. It's going to be right in this range. Is going to be my stop loss on the trade. I'm looking to consolidate up in the high 40s and then eventually make a move to fill this gap. I'm looking for a gap fill. Okay, my first take profit is going to be the gap entry point right around 51, because right here would be the gap entry. And then my main target is going to be a gap fill up to that $56 area. Okay, so that's kind of my game plan with the trade. We have to get through 50. 50 is a key level for this stock. You guys can see here right around this 50 level, you can see previous support back here in October. Okay, previous resistance there in July, and then we had the big gap up in August. And then we zoom in, you can see yesterday you had the high of the day right there at 50. That 50 is a key level on Roku. So once we get above 50, it should be a clean shot to 56. Okay, and that's what I'm looking for. So I'm willing to risk about $2 to make 8 or 7.5. So the risk reward is there on the trade, but we got to get through 50 first. And I'm thinking with that volume on the break through the neckline, an inside consolidation day, I'm thinking maybe we make our move up into the mid-50s on Roku. All right, that's it, gang. Thank you for those that joined me today on TGG Tuesday. I will see all of you in chat tomorrow. Take care.